Conor, we spoke around this time last year. What a difference a year makes. You're now in a new global role. When we look at venture capital investment in 2023, we saw quite a decline. How healthy is the startup ecosystem given investment levels?
It's healthy from the point of view there's plenty of capital available to be invested. I think what we're seeing in the numbers coming down from last year, first off, is like last year we're still a little bit on the tail end of kind of the go-go days of 21 and 22 when there was probably actually too much funding in hindsight. But that capital is being deployed at a much slower pace. The more uncertainty there is, the slower the pace of investment. And I think also after certain companies last year, certain investments that had failed, I think the VC firms are actually taking a little bit of a longer time to do their due diligence, et cetera. So all these things wrapped together gets you to where we're at.
Are there any sectors that are actually weathering the turbulence that we're seeing?
Everything around AI seems to be just completely bucking the trend of everything else. Health tech, there's a certain amount of sustainability around that. I think clean tech, energy are also places where things aren't as bad. I think you get into sort of consumer internet, marketplaces, et cetera, they're really hurting.
Are there any lessons that those sectors can actually learn from those ones that are actually doing better?
You talk to a lot of clean tech and climate companies. They're very, very good at defining the problem that they are trying to solve.
How do you advise clients who are looking to strike a balance between investing in new technologies while looking to that long-term horizon of profitability?
It's hard, and it is a place where we try to drive a lot of value. Clearly, the more technology you deploy, invariably over the long term, it will actually yield to profitability if you're implementing the right stuff. However, of course, it generally comes with an upfront ticket that in these times it's hard to actually justify. So we'll advise our clients about, okay, which will help them run like a technology selection process, trying again to solve for cost versus long-term profitability. We'll also kind of advise them on systems they have already. Maybe they don't need them. Frankly, from time to time, we'll help them build up arguments to negotiate with vendors. So maybe that big ticket is structured slightly differently. So we're really sitting beside their CTO, their CEO, their CFO, trying to just optimize the best financial solution. But I'm a big believer at the end of the day, like technology is going to, and I'm not necessarily subscribing to technology is going to eliminate people, but I just think you deploy technology in an organization, you can get significantly more from the employees that are there. And frankly, the employees are happier because they're not doing some of the work that the technology has replaced. So it's a big thing for us.
As a global head, is there one or two particular regions you see the most growth or opportunity in the next 12 to 18 months?
For the last year or so, I've sort of believed a lot in Latin America, particularly in Brazil. I think there's a lot of good things happening in Brazil. That's one to keep an eye out. And maybe just because I'm biased, because I'm there, like the U.S., if we can kind of turn the U.S. around, it kind of triggers a bunch of other markets as well. So I'm hopeful there. The one problem, though, is we have this election that's going to come up a year from now that tends to slow things down as well.
Conor, you're in a new role. You're the global head of private enterprise for KPMG. What do you hope to achieve in this role?
I'll say growth, and that'll sound very selfish, but the degree to which the practice is growing, it means like we are doing high quality work that's really well perceived by our clients and by other stakeholders in the ecosystem. So we're very, very growth focused. And despite everything that we've talked about before, I'm really looking forward to my first 12 months in the role and think we can get a lot of growth out of what we're dealing with.
So you oversee the emerging giants portfolio. Of course, as we've said, there's been a lot of turbulence in the market. So how have you helped your clients navigate the turbulence while also focusing on growth?
It's been hard. And I think, what we try to do with our clients is try to be as nimble and as adept to modifying what it is that we're doing for them, depending what the market is. So a company was hard charging towards an IPO. The IPO window shut. It was time for us to give them more input around other alternatives. It was time for us to give them input on, like, here's how you may want to think about getting that X million dollars to last 12 months longer than you did before. The emerging giants practice and private enterprise in general is very good at adapting very quickly so we can deliver the most value to our clients, regardless of the circumstances that we're in.